Next up, Stephen Schwarzman rose through the ranks at Lehman Brothers before setting out to build his own private equity empire, the Blackstone Group. Schwarzman has $13 billion to his name and now wants to give some of that fortune away. He's funded a scholarship modeled on the Rhodes Scholarship to educate and prepare the next generation of global leaders in China. And Schwarzman recently gave Yale, his alma mater, $150 million to build a new student center. He didn't hesitate to mention that a former Harvard dean admitted that rejecting Schwarzman's college application was probably a mistake. But does Yale, one of the wealthiest institutions in the world, really need another student union? Stephen Schwarzman is here to talk about that and more with Stephen Rattner, who was the lead auto advisor to the Obama administration and is an economic analyst on MSNBC's Morning Joe.
Thanks so much for the introduction. Thanks so much for Steve for being here. I have about 2 hours of questions and 14 minutes to ask them and answer them. So we'll get started. We had a fascinating conversation backstage about politics. We will hopefully get to that before it's over. But let me go back to the beginning, Steve, in a way. When you and I met in 1983, I was a first-year associate at Lehman Brothers. You were a rising star young partner. And if anyone had asked you then, are you going to found and run the most successful alternative asset management firm in the world, what would you have said?
I would have said no. I was very happy at Lehman Brothers, and it was good to hire Steve. He was a high-risk hire because he...
But this is about you, not about me.
Yeah, but he never had finance, but he was so smart that we decided to take a risk on him, and it was a great decision, because he's had an amazing career. So there are a lot of things that I've gotten right, like you, but foreseeing the complete future and the fact that Lehman would get sold as a result of a financial problem and that I would leave was really not in my playbook.
So if it hadn't been sold, you would have stayed there happily and done your investment banking business and lived successfully ever after, but not quite the way you're living now.
Right. Well, I was quite happy there. It was very challenging intellectually, and you operated around the world. It was good. So circumstances sometimes in life, change what you do.
Well, our mutual friend Mike Bloomberg says the best thing that ever happened to him was getting fired. After Solomon bought Fibro, you were never fired, but your close friend Pete Peterson was and left, and then you guys started Blackstone. And so when you started Blackstone, you had never invested a dime, at least not professionally. You were an advisor, as I was. So what made you think you would be good at investing?
I didn't think it was so hard. And I knew the people my age who were doing that, and they seemed to be successful. And I also was serving as an investment banker for them because they had trouble getting anybody to basically represent them. So I saw what they were doing. It didn't look too complex. And so I tried to get Lehman actually to do the same thing, and we generated a very large deal right out of the box, and the board of the firm turned us down. In fact, we would have made more money on that one deal than the value of the whole company was when it was sold. So I always had an interest in that. It seemed like a great business model, and so when we started, that's what we did.
So you basically said to yourself, I'm as smart as they are, I can do what they do.
No, I'm just sort of generic, and that's sort of what they were doing. It wasn't so hard. Remember, at that time, stock prices were very low. So retrospectively, almost anything that you did ended up working out pretty well because the world improved, and the mechanics of what was being done were pretty straightforward, and so I didn't see why we could not do the same thing.
So you mentioned stock prices, which is a good segue into talking a bit about your business. So stock prices today, nobody thinks are low. You can look at various measures, the Shiller P that you and I are familiar with, and various other metrics. They're clearly somewhere on the higher end of the range. Are we facing another set of bubbles, or how worried are you about where stock prices and all asset values are today, and how does that affect how you're running your business?
Well, the central banks around the world after the Lehman crisis decided to lower interest rates to increase the value of assets so that people would feel they had more money so they'd go out and spend more. And that's been successful in the main, and they've continued to do that, and that's driven values higher. The world has gotten better economically, so it's not just the central banks keeping rates low, but as you look at quantitative easing now being applied to Europe and their stock prices going up, economic growth is having trouble supporting some of those higher values. I don't think we're in bubble territory, but I think we're being reasonably valued on the higher side. And in our world, whenever that happens, you become more cautious. I've been doing finance now for over 40 years, and I've seen this cycles, and you don't want to be massive buyers at the top. You'd rather do that at the bottom, and so we're cautious. We're still investing a lot of money because when the world is your oyster as opposed to just one country, and in that sense, our business has changed to be global. You can almost always find something interesting, but it's just not in the exact same place.
So where are the undervalued pockets of the world? What part of the world do you think is most exciting?
Well, it varies by asset class. So, for example, buying distressed real estate in Europe has been a very interesting thing. Because the Europeans have lost confidence in themselves, and a lot of those properties can be bought and fixed, which have been under invested. The energy complex, prices went down over 50%. They've bounced a little bit, but there's still people who have need money there, don't have enough cash flow to continue drilling in certain areas, and so you can invest there. There's almost always something interesting that's going on.
Let me ask you a couple of one-word or one-sentence answers. What business did you sell that you wish you hadn't during your investing career?
The right question to ask is which company didn't I invest in that I should have?
That was my next question.
Right,
but,
and that one is a company that starts with a B and it ends with a G, and it's in the media business called Bloomberg. And Mike came over to see me right when he was looking for some outside capital, and a good friend of ours, Steve Fenster, who was a partner of ours at Lehman, was his only outside board member, and he asked if I would want to do that, and I said I'd love to, and so it was, I forget how much it was, like $200 million or something like that, and so he said, look, there's one thing. He said, I'm never gonna go public, and I'm never going to sell my business. So if you come in as my partner, you're there forever. And I said, well, we're managing money with 10-year term, so I have to get some liquidity. He said, well, that's your problem, not mine. And I said, well, that's the contract that we have with our investors. So he said, well, look, I'm not going to help you. And I don't want to start looking to find an exit for you as soon as you put money in. And so if you can't change the way you're constructed, I can't take you. So fast forward, that was about 20%, I think, of Bloomberg at that time. And today, Bloomberg is worth somewhere between $35 and $40 billion. So investing roughly 200, I could have made $8, and that's not $8, that's $8 billion. So you do make mistakes in my line of work, and I guess I would do the same mistake again. And unfortunately, because Mike is still private, and he's not selling his business, and You know, I'd be stuck with $8 billion worth of stock. Who would ever want that, right?
I think you'd figure it out. Why don't we move on in the interest of time and talk about a few public policy things. And let me start with income inequality, about which much has been written.
Right.
Do you agree with the Pickettys and a lot of the conventional wisdom that there has been massively growing income inequality? So just as a baseline, do you accept that this exists?
I accept that the fact that GDP per capita for the middle income group has not grown for quite some time, and that is a bad thing.
And you accept that people in the upper echelons have grown quite considerably in recent time?
I think that's mathematically true.
And so, well, not everybody agrees, so I just want to make sure we're on the same page. And do you think it's an economic problem? Do you think it's a social problem? Do you think it's both?
I think it's part of globalization, and I think it's part of an education issue. In today's world, it's very difficult to be competitive without a high level of education. In the US, for example, over the last 30 years, depending upon the measurement, we've gone from #1 in the world to number 27. The fact that this has happened at the same time that income disparities or inequality have occurred strikes me as no surprise at all. And when you add to it the fact that we're now in a globally competitive world where work itself changes, to me the issue is very much focused on education.
But let me throw two other things in the mix and get your reaction. One, which is much talked about, is the ratio of public company CEO pay to the average worker, which has gone up dramatically. And then yesterday, interestingly, there was a chart in the New York Times looking at Wall Street pay, which throughout the time we were growing up, the 50s, the 60s, 70s, was 1.5, 2 times average pay. Then it went up to 4.5 times average pay, and today it's 3.5 times average pay. So do you think some combination of Wall Street and the way public company CEOs are paid are part of the problem?
I think part of what's happened, which is a bit of an odd outcome, is that there's been a big shift in compensation from cash to stock. And when you've had an environment where stock market has done extremely well, that you end up with different types of outcomes for the people who get stock compensation. And I think that's a big driver of what's going on. The other issue is that the businesses today are more complex because they're truly global, many of them. And the people that you're referencing, for the most part, are dealing with a world that's relatively difficult for people to understand. I mean, you'd have to travel incessantly, you learn things, and you're making very complex decisions. And I think that's led to some of these compensation consultants saying, well, somebody who's got this kind of a function and skill is different. So I think it's both of those issues.
Let's talk for just a second about taxes, and then I want to move on to your philanthropy. So taxes is another part of this equation, and particularly capital gains taxes, and even more specifically, the carried interest taxation, where those of us who have received carried interest pay a lower rate of tax. So what's your view of taxes, the tax policy at the moment? What would you change? Do you think your own taxes are too high, too low, or about right?
Well, geez, mine are somewhere in the 50s because I live in New York. That seems not low. In the United States
so
right now,
you get capital gains treatment on a lot
some
of your
of
income.
my income, but you know, I have a lot of ordinary income as well. The United States today has the second most progressive income tax after France, and I guess there are over 200 countries. So that positions us in a pretty unusual way. From a tax perspective, I've come to the conclusion that the tax code is so complicated and the approach that we're trying to do with tax reform isn't getting done, not just because of politics, it's because the numbers don't work. You can't reduce tax enough because there's so many preferences. So I believe in relatively simple solutions, and I think we should have a relatively flat tax. You might have 2 brackets or 3 brackets, but you should get rid of all preferences. I know that sounds radical, but you could knock the price, the cost of sort of tax preparation and other things away. And countries that have gone to this type of approach have almost always done well economically for the people in their society, which is really what the objective of it is. And so whether you're getting rid of everybody's favorite preference, if your tax rates are somewhere between 10 and 20%, it doesn't matter if you get rid of those, and it makes life simple, and it's more inclusive, and it's fair, and you need a underwriting for people who are not able to take care of themselves from an income perspective, so there's no unfairness visited on them. I think that's an easy way to go, frankly.
So we're out of time, but I really do want to give you a couple seconds to talk about your philanthropy, because you've given some very large gifts: $100 million to the public library, $100 million for the Schwarzman Scholars, $150 million, as was mentioned, for Yale. Just in a word or two, tell everybody what your animating principle is, or how you think about your philanthropy, what you're trying to do. And one last piece. I don't think you've signed the Giving Pledge, as best I could tell, and maybe you could explain that.
Yeah. Well, in terms of what animates me is I like making change that helps people. And I really value education very highly, because, I was just another generic American from the suburbs. And what's enabled me to do a lot of this stuff that I've done is I've had an amazing education, whether it was, sort of public high school, and I went to Yale and I went to Harvard Business School. Without that kind of background, I wouldn't be able to fully be able to do what I do. So we also give money to the Inner City Scholarship Fund. I send hundreds of kids to school who are below the poverty line, and they have a 99% graduation rate. So I like making transformational changes in what I do. I give a lot of money to regular causes, but the things that really animate me are changing people's lives. And I'm an entrepreneur by my nature, so I like creating new things. So whether it's the Schwarzman Scholars, like the Rhodes taking people from around the world to China to try and defuse tensions, or what I'm doing at Yale, which I hope changes the interactions of the undergraduates and graduates and puts them together with faculty in an interesting place, or the public library that does all kinds of good things for regular New Yorkers. All these things speak to me. I like to do large things because I like to do them sort of myself.
Your way.
And the problem is that there's only so much time, and there are only so many things. Well, the money, what happens if our business is good, we try and create more. And if you create more, you have to give it away. Because it exceeds your own needs, and so it's a good thing to do, and it becomes part of a life's work.
On that note, thank you so much. I wish we had more time.
Thank you.
Appreciate it.